Hey guys, it's Carter. Welcome back to the channel. I hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about swing trading, but how to swing trade with a full-time 9-to-5 job. We're going to be talking about some tips and tricks, some techniques, and at the end of this video, we are going to be talking about a strategy that I've used for over 6 years when I had my full-time job. This was pretty much the strategy I used to quit that. So I hope you guys all enjoy it. If you guys have any questions, by all means, ask down below. And if you guys want to learn more about swing trading and trading in the market, check out my amazing school where we talk about how to find stocks, my strategies, my mindsets, the Swing Trading Masterclass. It's absolutely fantastic. And limited time offer is code YouTube, all caps, for 20% off. We have private live streams, quizzes, group chats, everything you need to get started with trading. So check it out. But guys, let's jump into this here. So when it comes to swing trading and trading in the stock market and trying to escape your 9-to-5 job, that is everybody's dream situation where you quit your job and you can just trade full time. And yes, it is very, very, very doable, but you need to have a plan. Going into trading and trading in the stock market, you need to understand and you have to treat it like a job. And what I mean by this is, how long does it take a doctor, to become a doctor, or an engineer to become an engineer? It takes years of practice, of hard work and dedication. You need to have that same escape and you need to have that same mindset when it comes with trading. Another thing that I think people don't really pay attention to is realistic expectations. When it comes with trading in the stock market, and if you have a small amount of money, whether it's $100 or $1,000 or $10,000, whatever it may be, you need to have very, very realistic expectations when it comes with trading. If you're expecting to turn $100 into $100 million, I'm sorry to say it, but that's not going to happen. Or $100 into $100,000, it's not going to happen. You need to just focus on learning, and then after you learn, then paper trade, and then slowly start introducing cash and capital into your account, because if you don't, I'm telling you, it's going to be a recipe for disaster. You also need to have the mindset of a couple of years out, right? Like I mentioned, it takes such a long time to become successful with trading, and you need to understand that. You need to realize, well, if I start now, I could probably have a funded account within 2 to 3 years and then possibly start trading. All those people that say you can be a full-time trader within 30 days, they're lying. I hate to say it. Have realistic expectations. So another thing that I do think is awesome about trading nowadays is you can do everything right from your phone. There's a ton of great brokers out there that offer limit orders, that offer all of your stop orders, your profit orders. The one that I love and recommend is Moomoo. I'll put them down below. You guys can get like 15 free stock by signing up with them. But the reason I love it, and pretty much the broker that I'm going to be showing you later in this video with the strategy, and the reason I love it is they offer paper trading, they offer scanning, they offer a variety of tools to help you just get started and start making money trading. So make sure you have a broker that you guys can do on the go, because if you're at your 9-to-5 job, you could make some trades there. So guys, let's jump into this and how to pretty much swing trade. So looking at this was a stock that I absolutely love. Ticker symbol CAL. Now, when it comes with trading in the stock market, your main goal is to make money. That's everybody's goal, right? Whether it's 1% or 100%, that is your goal. But I'm telling you, what separates a successful swing trader from a non-successful swing trader is base hits. Now, not baseball, but those 1, 2, 3% returns compounded over the year. That's where you're going to make your money. It's not going to be off buying a stock for $1 and selling it at $30, $40. It's going to be buying a stock at $1 and selling it for $1.10 and just doing that repeatedly. That's pretty much what makes or breaks a trader. And I'm telling you, having good risk management skills, so risking $1 to make a couple of dollars, is always a great thing to understand here. So, all right, getting back on track. This was a stock, ticker symbol CAL, that we called out last week in our group. Now, you guys can see one of the reasons we love it is it has this really, really nice upward trend. So the stock has gone from $16 to $41 in about a year's time. Now, you guys can see that we have a variety of different indicators. We have the blue line, red line, and then this green one down here. Now, the blue line is what we call the 90-day moving average line. The red one is the 200-day. And then this green one down here is what we call the RSI line. Now, the 90-day moving average line, so this blue line acts as support, resistance, and trend indication, as well as the red. The red is the 200-day moving average line. So the difference between the 90 and the 200 is just harder support, harder resistance. You guys can see it hits these lines, and we've just seen a lot of tendencies of getting great buying pressure there. So the 200, so the red one, is just going to be a harder support. It's going to be harder for it to fall below it than the 90. You guys can see it falls below the 90 quite often, but we do see those great tendencies of getting good buying pressure on it. Now, it's not 100% obviously, but one thing to note is when the stock is above it, it's acting as support. When it's below it, like it's here, it acts as resistance. You guys can see it hits it and we just get sell off here. So understanding those two things is going to be super, super important, because now you can kind of judge about where you want to buy a stock. You don't want to buy it when it's all the way up here or in these middle grounds. You want to buy it as close as you can to these lines. And that's kind of what we did here. With ticker symbol CAL, you guys can see pretty much it was trading for about $36. So let's use our tool of using our long position tool. So if we hopped in near and around this 90-day moving average line and we set our stop loss, so the max amount of money we're willing to lose, just a hair below it, just because if it does dip down a little bit, we could you don't want to get stopped out. A good number is 2% or so. Now, another thing here is, where do you put your profit? You just put it anywhere? Well, for me, I put it at resistance line. So pretty much right here where it hits that, $39 mark and we get sell off. That's my main goal when it comes with this target price for this position here. So now we have our target. We're risking about $1 to make $4.35. So with this type of risk and reward, we could still be wrong 3 times and still be profitable on this type of trade. Now, you guys can see it hits this price, and recently we had this great move where it's up 4% and pretty much 1% after hours. So very, very good understanding of risk and reward, where you're buying this position, your stop loss, and your target. Now, you may be saying, Carter, well, what is this green line down here? This is what we call the RSI line, also known as the relative strength index. This pretty much determines if a stock's overvalued or undervalued, just in simple terms. So you guys can see that, when this stock here was trading for, the $36 area, it was near and around a 32 on the RSI. So looking back at the previous points it was trading for, a 32 was right in here where we had this great move. Beforehand, it was right in here where we had this great move. So now I have more indications. So we're on a support line. We have a nice upward trend. It's undervalued on the RSI line, and you can even draw out some trend lines and see if there's also a trend here. So what I want to do is I want to find some of the lowest points and draw out, this trend here and see what we have, going on here. So not really perfect, but you guys can kind of see that there is actually a somewhat of a decent trend right there. So, just using as many indicators and things in your favor is super, super important here. So you guys can even see, right, this nice trend hits it a couple of times. So just more indication of getting buying pressure. So, using all the tools to your advantage, using technical analysis, using indicators like moving average lines, RSI lines, and then making those educated decisions on if you should buy them is super important. And the great thing about nowadays is, like I was saying, you can do all of this right from your phone. So when you're at a job or you're in your office, you can, on your lunch, pull up stocks, pull up your scanners, pull up a variety of tools to see, okay, what's going on with the market. Should I buy? Should I sell? Or just check out my school and you guys can ask questions. It's absolutely fantastic. So guys, we'll end it here. I hope you guys have a fantastic rest of your day. Don't forget, you guys can use code YouTube for 20% off, and we'll see you guys in the next one. Take care, everyone.